Hi guys! Enjoy John's analysis.
Stop. Before you do anything with your Bitcoin position today, before you open the exchange app, before you type in a sell order, before you convince yourself that this time is different, give me 35 minutes. Because what you're about to do has been attempted before. Not by weak holders, not by people who did not understand Bitcoin, by people exactly like you. People who held through months of declining prices, watched the headlines get worse week after week, felt the weight of a 47% drawdown from the all-time high of $126,198 on October 6th, 2025, and finally reached the conclusion that the rational thing to do was to sell. Every single one of them regretted it. Not some of them, not most of them. Every documented seller at every major Bitcoin cycle bottom, 2011, 2015, 2018, 2020, 2022, has either publicly expressed regret or permanently exited an asset that subsequently recovered to new all-time highs. That is not opinion. That is the historical record of every bear market Bitcoin has ever produced. Here's what the market looks like right now as of June 3rd, 2026. Bitcoin is trading at approximately $66,965, down 47% from its all-time high. The fear and greed index is at 11, extreme fear territory, the lowest since early April. The daily RSI has hit 10.0, approaching the most oversold reading in months. US spot Bitcoin ETFs have recorded 11 consecutive days of net outflows, totaling $3.45 billion. Peter Schiff is predicting Bitcoin will collapse below $20,000. The headlines are describing a market in crisis. And you are thinking about selling. I'm not going to tell you not to. I'm going to show you exactly what the data says, exactly what the people who sold at every prior bottom believed when they made that decision, and exactly what happened to them afterward. And then I am going to let you decide. But you need to see this first. Stay until the end, because the final section of this video contains the one framework that separates every holder who has made it through Bitcoin's worst corrections from every holder who sold at the bottom and watched the recovery happen without them. And I'm going to give you that framework, the complete version, at a price that will seem almost absurd relative to what the decision you are contemplating could cost you. Let us start with history. Before we go any further, drop a comment right now, one sentence. Tell me, what is the specific thing that is making you consider selling today? The price, the ETF outflows, the shift prediction, the strategy sale, the macro environment, or something else entirely? One sentence. Because at the end of this video, I'm going to tell you what your answer reveals about whether your reason to sell is data or emotion. And the difference between those two things is worth more money than most people will earn in a year. Let us go through every major Bitcoin crash in history. Not the headlines, the actual data, what the price did, what people believed when they sold, and what happened to the holders who did not. The 2011 crash peak, $31.91 on June 8, 2011. Bottom, $1.99 on November 18, 2011. Decline, 93.8%. Duration from peak to trough, 163 days. The crash was triggered by a security breach at Mt. Gox, then the world's dominant exchange. 850,000 Bitcoin were stolen. Investor confidence collapsed. The technical community treated the crash as proof that the digital currency experiment had failed permanently. What investors believed when they sold, that the security flaw was systemic, that no solution existed, that Bitcoin had been permanently destroyed by criminal exploitation of the network, that anyone who continued holding was delusional. What happened to the holders who did not sell? Bitcoin recovered from $1.99 to $31 within 20 months. Those who held the 2013 peak of $1,163 realized a gain of 584 times from the bottom. The network security problem that justified selling was solved. The asset recovered. The narrative of permanent death was wrong. The 2013 crash. Peak, $1,163 on November 30th, 2013. Bottom, $152 to $164 in January and February of 2015. Decline, 86.9%. Duration from peak to trough, 410 days. Time to new all-time highs, 1,068 days, approximately 3 years. China banned financial institutions from handling Bitcoin in December 2013. Mt. Gox filed for bankruptcy in February 2014, revealing 850,000 Bitcoin had been lost, representing roughly 7% of all Bitcoin in existence at the time. Silk Road had been shut down by the FBI in October 2013. The combination of regulatory hostility, exchange collapse, and criminal association created a narrative that Bitcoin was irreversibly tainted, what investors believed when they sold, that sovereign nations would uniformly ban the asset, that exchange counterparty risk made institutional custody impossible, that Bitcoin's association with criminal markets would prevent any legitimate future adoption, that the experiment was over. What happened to the holders who did not sell? Bitcoin recovered from $152 to $19,891 within 3 years, a 130-fold gain from the bottom. Every regulatory nightmare that justified selling proved temporary. China's ban was eventually reversed. The criminal association narrative was replaced by institutional adoption. The exchange collapse created the demand for regulated custody solutions that enabled the ETF era. The 2018 bear market. Peak. $19,891 on December 17, 2017. Bottom. $3,122 on December 15, 2018. Decline. 84%. Duration from peak to trough. 363 days. The 2017 bull run was fueled by ICO mania and retail FOMO. When the SEC began shutting down initial coin offerings as unregistered securities, the speculative premium collapsed. Bitcoin fell steadily throughout 2018 with minimal relief rallies. This crash devastated mainstream retail investors who had bought near the top during media saturation in late 2017. What investors believed when they sold? That Bitcoin was purely speculative with no fundamental value. That regulatory crackdowns were permanent and globally coordinated. That institutional adoption was a fantasy that would never materialize. That the 2017 run had been the last opportunity and the asset was now permanently impaired. What happened to the holders who did not sell? Bitcoin recovered from $3,122 to $69,000 within 3 years, a 22-fold gain from the bottom. The institutional adoption that seemed impossible in 2018 produced the ETF approvals of 2024. The regulatory framework that seemed hostile in 2018 became the legal foundation for the institutional infrastructure that currently holds over $100 billion in ETF assets. The March 2020 COVID crash. Peak. Approximately $10,500 in February 2020. Bottom, $3,782 on March 12th and 13th, 2020. Decline, 63%. Duration, approximately 30 days. The fastest crash and recovery in Bitcoin's history. When global markets liquidated everything in March 2020, Bitcoin fell 52% in 48 hours. The speed was unlike any prior crash. The narrative was immediate and powerful. Bitcoin had failed to function as a safe haven, correlation with risk assets meant it provided no diversification benefit, and a global recession would permanently destroy speculative appetite. What investors believed when they sold? That Bitcoin was not what its advocates claimed. That correlation with equities during a crisis meant it was just another risk asset. That global recession would eliminate demand for speculative investments permanently. What happened to the holders who did not sell? Bitcoin recovered from $3,782 to $69,000 within 20 months. An 18-fold gain from the bottom. The COVID crash that justified selling became the entry point that funded generational wealth for the holders who stayed. The 2022 bear market. FTX final peak, $69,000 in November 2021. Bear market bottom, $15,476 in November 2022. Decline, 77.6%. Time to new all-time highs, approximately 24 months. The 2022 collapse featured 2 distinct phases. The April to June correction was triggered by Elon Musk's reversal on Bitcoin payments and China's mining ban. The second and larger collapse was driven by Federal Reserve interest rate hikes, the Terra and Luna implosion, and the cascading failures of Celsius, Voyager, BlockFi, and finally the FTX collapse in November 2022, the largest fraud in crypto history. And what investors believed when they sold? That the FTX collapse had permanently destroyed institutional credibility, that regulatory action following the fraud would be existential for the industry, that Bitcoin's association with Sam Bankman-Fried's fraud would prevent any future institutional adoption, that the dream was over. What happened to the holders who did not sell? Bitcoin recovered from $15,476 to $126,198 within 3 years, a gain of approximately 815% from the bottom. The regulatory framework that seemed hostile after FTX produced the ETF approvals of January 2024. The institutional credibility that seemed destroyed attracted BlackRock, Fidelity, and CalPERS as holders. The pattern that nobody mentions when you are about to sell. Look at those 5 bear markets again. Each one had a narrative that made selling feel rational, Not emotional, not weak, but logically justified by specific, real documented events. The Mt. hack was real. The China ban was real. The FTX fraud was real. The COVID recession fear was real. The SEC regulatory crackdowns were real. And in every single case, the holder who treated the real event as a permanent conclusion rather than a cyclical disruption, the holder who said this time is different and Bitcoin will not recover, was wrong. Not sometimes wrong, every time wrong. The current drawdown has real causes. ETF outflows of $3.45 billion over 11 consecutive days are real. Macro pressure from oil above $93 and Fed rate hike probabilities at 68% are real. The strategy sale is real. Peter Schiff's prediction is real. The question is not whether these things are real. They are. The question is whether they represent a permanent structural change or a cyclical disruption, and what the data actually says about that distinction. What the behavioral science says about this moment. Before we look at the data, we need to look at you, because the decision you are contemplating has been studied extensively by behavioral finance researchers, and what they found is not flattering, but it is essential. Daniel Kahneman's prospect theory, published in Econometrica in 1979 and foundational to the Nobel Prize in Economics he received in 2002, established that losses feel approximately twice as powerful as equivalent gains. This asymmetry, known as a loss aversion, creates a systematic bias towards selling during drawdowns that is completely independent of fundamental value. Kahneman demonstrated this with a simple experiment. He offered successful executives a coin flip proposition where tails cost $10,000. Every participant required a potential gain of at least $20,000 to accept the bet. The pain of potential loss was twice as powerful as the pleasure of potential gain at every wealth level, among every demographic, in every culture where the test was conducted. What this means for you right now, specifically, is this. You are holding Bitcoin at approximately $66,965 today. If you bought at $30,000, you are still up 123%. But the loss aversion mechanism does not measure against your entry price. It measures against the highest price you have seen in your portfolio. You watched Bitcoin reach $126,000 in October 2025. Your brain registered that as your reference point. The distance from 126,000 to 67,000 is processed by your brain as a loss of approximately 47% of your wealth, regardless of what you actually paid. That psychological loss is indistinguishable from a real financial loss. Your cortisol response is the same. Your threat detection is the same. Your urgency to act is the same. The Kraken FOMO and FUD survey, conducted in October 2024 across 1,248 crypto holders, found that 81% of holders have made decisions based on fear, uncertainty, and doubt. And 63% said those decisions negatively impacted their portfolio. Not the decisions made at cycle tops. The decisions made in exactly the moment you're in right now. Recency bias adds another layer. During every Bitcoin bear market, the dominant narrative is that the bear market will continue indefinitely. Investors extrapolate recent price performance into the future, creating maximum pessimism precisely at bottoms. The fear and greed. Index at 11 confirms this is exactly where the market is right now. Extreme fear, maximum pessimism, and extreme fear, documented across every prior Bitcoin cycle, has not been a signal to sell. It has been the signal that has historically preceded the largest subsequent price gains. You are not being irrational. Your brain is functioning exactly as designed. Loss aversion evolved to protect humans from physical danger. It is genuinely useful when a predator is chasing you. It is systematically destructive when applied to long-duration asset holding, because it causes you to sell at exactly the moment the data says you should be holding. Understanding the mechanism does not eliminate it, but it means you can check your decision against data rather than feeling, which is exactly what we're going to do now. Before we get into the data, 30 seconds. Everything we are about to cover, the on-chain signals, the historical cycle analysis, the protocol that tells you when the data actually justifies action, is documented in full in the Bitcoin Holder's Bible, not as theory, as a practical decision framework. A 5-minute weekly check that converts the signals I'm about to walk through into one clear answer: action or no action. The retail price for the Bible is $97. But because you are staying through this correction to look at the data rather than react to how it feels, if you stay until the very end of this video, I'm going to hand you a $50 voucher so you can claim your copy for $47. Stay with me. What the on-chain data says right now, this is the section of the video that the people about to sell are not watching. They are watching price charts and reading Schiff predictions. The data I am about to walk through is the data that has, without exception across 4 complete Bitcoin market cycles, identified where the market actually sits. The MVRV Z-score, the market value to realized value. The Z-score compares Bitcoin's market capitalization to its realized capitalization, what the market values Bitcoin at versus what holders collectively paid for it. When the Z-score exceeds 6 or 7, the market is historically overextended. Cycle tops have formed at these levels in 2013, 2017, and 2021. When the Z-score approaches 0 or goes negative, the market is at or below aggregate cost basis, historically the deepest accumulation territory that has preceded the largest subsequent rallies. Current reading, approximately 0.59. For context, the October 2025 all-time high at 126,000 produced an MVRV Z-score of only 1.73, already well below the overheated zone. The 2021 peak produced a reading of approximately 5.9. The 2017 peak produced a reading of 8.2. At 0.59 today, the MVRV Z-score is 1/10 of the levels that have historically justified concern about cycle tops. It is in the range, between 0 and 2, that the data classifies as fair value, approaching undervaluation. If you are selling because you believe Bitcoin is overvalued and about to collapse from an extended top, the MVRV Z-score does not support that thesis. The overheated readings that have justified historical selling are at 6 to 7. We are at 0.59. NUPL, net unrealized profit and loss. NUPL measures the aggregate ratio of unrealized gains to losses across the entire Bitcoin holder base. Above 0.75 is the euphoria zone, the territory where cycle tops have historically formed. The November 2021 peak saw NUPL enter euphoria territory at approximately 0.75, flagging the top with remarkable precision before the 77% decline that followed. Below 0.25 is the capitulation zone, the territory that has historically marked cycle bottoms. Current reading, approximately 0.24, just at the boundary of capitulation territory. Not in euphoria, not even in the belief zone that precedes distribution. In the zone that has, in every prior cycle, characterized the maximum accumulation window before the next phase of the market begins. The Bitcoin Holders Bible documents this precisely. NUPL below 0.25 is one of the 4 conditions that, when combined, have historically identified confirmed cycle bottoms with the highest statistical reliability. The other 3 conditions are MVRV Z-score below 1, LTH SOPR below 1.0, and elevated RHODL ratio. 3 of those 4 conditions are currently met. All 3, simultaneously, for only the 4th time in Bitcoin's 15-year history. LTH SOPR, long-term holder. Spent output. Profit ratio. LTH SOPR. Measures whether Bitcoin moved on-chain by long-term holders, those who have held for more than 155 days, was sold at a profit or a loss. A reading above 1.0 means long-term holders moving coins are doing so in profit. A reading below 1.0 means even the most conviction-oriented segment of the market is realizing losses, capitulation. Current reading, approximately 0.819, below 1.0. For context, the November 2022 cycle bottom at $15,476 saw LTH SOPR drop to approximately 0.67. The December 2018 cycle bottom at $3,122 saw LTH SOPR drop to approximately 0.80. The current reading of 0.819 is approaching, but has not yet reached, the extreme capitulation levels that have historically marked definitive cycle bottoms. This is important information for 2 reasons. First, it confirms that genuine distress is present. This is not a healthy mid-cycle correction where long-term holders are moving coins in profit. Pain is real. Second, it suggests, based on historical precedent, that the final stages of the capitulation process may not yet be complete. The data does not rule out further downside. But it also confirms this. You are not selling into an overvalued euphoric market at risk of collapse. You are potentially selling in the final stages of a capitulation event, the precise moment that has, in every prior cycle, been the worst possible time to exit a position. The RHODL ratio. The RHODL ratio measures the balance between conviction capital, coins held for 1 to 2 years, and speculative capital, coins held for 1 week or less. A high reading means old coins are sitting still. Speculative sellers have exited. The holder base is dominated by conviction capital. Current reading, 1,829.74. The 2 prior readings of comparable magnitude occurred at the confirmed cycle bottom of late 2015 and the confirmed cycle bottom of late 2022. Both preceded sustained multi-year bull markets delivering gains of multiple hundreds of % within 18 months. This is the conviction capital reading at what history says is a bottom, not a top, a bottom. The realized price floor. The Bitcoin network's realized price, the aggregate average cost basis of all coins on the network, currently sits at approximately $56,200. At $67,000 today, the entire network is sitting on aggregate unrealized profit. The last time Bitcoin's price fell below the realized price was in early 2023, and it has remained above it ever since. A fall to the realized price from current levels would represent an additional decline of approximately 16%. Painful, but not catastrophic for a holder with a multi-year horizon. A fall to Shift's $20,000 target would require the price to trade at 64% below the aggregate cost basis of every coin on the network. A scenario that has occurred before but has required a complete ecosystem-level catastrophe to produce. The 5-metric convergence. What it means. BuyDFI's on-chain analysis, published in May 2026, documented a critical finding. The Q1 to Q2 2026 period represents only the 4th time in Bitcoin's 15-year history that 5 of 7 core Glassnode metrics simultaneously flagged bottom formation behavior. The 3 prior instances, late 2015, late 2018, and mid-2022, each preceded rallies of 300% or more within 18 months. We are in the 4th such convergence. This does not mean Bitcoin cannot go lower. It can. The macro environment is genuinely hostile. The LTH SOPR has not yet reached the extreme capitulation levels of prior confirmed bottoms. Further downside is possible. What it means is that the on-chain structure of the current market is not consistent with a cycle top, followed by an extended bear market. It is consistent with a drawdown in the final stages, painful, real, and historically followed by a recovery to new all-time highs. If you are selling because the on-chain data supports selling, you need to look at the on-chain data, because it does not. What the smart money is doing right now. Words are cheap. Let us look at capital flows. Strategy. As of the most recent filings, Strategy, formerly MicroStrategy, holds over 815,000 Bitcoin, making it the world's largest corporate Bitcoin holder, surpassing BlackRock's IBIT. During the first 4 months of 2026, as the market debated whether the bear market had returned, Strategy accumulated approximately 80,000 Bitcoin at prices between $62,000 and $78,000. In April 2026, the company purchased 34,164 Bitcoin between April 13th and April 19th at an average price of $74,395 per coin. The company's most recent Form 8K confirmed a sale of 32 Bitcoin, 0.0038% of its holdings, to fund a dividend obligation. That 32 coin sale generated more market panic than 80,000 coins of accumulation generated confidence. That asymmetry is the fear mechanism operating in real time. Strategy is not selling. Strategy is accumulating at the prices where you are considering selling. BlackRock's IBIT currently holds over 572,000 Bitcoin, representing approximately 2.7% of Bitcoin's total fixed supply of 21 million coins. Larry Fink, overseeing approximately $12.5 trillion in global assets under management, publicly positioned Bitcoin as a legitimate alternative to gold in a CBS interview and in communications with sovereign wealth funds. Fink described a conversation with a sovereign wealth fund where the discussion was whether to allocate 2% or 5% of assets to Bitcoin. His assessment, if every sovereign wealth fund had that conversation, the result would be a Bitcoin price of $500,000 to $700,000 per coin. In the first quarter of 2026, IBIT saw net inflows on 48 of 62 trading days, drawing $8.4 billion in new institutional capital, as Bitcoin's price fell from above $90,000 to just over $70,000. The institutions that drove the largest Q1 inflows were buying during the same drawdown you're considering selling into, the institutional picture. BlackRock advised institutional investors that Bitcoin could occupy as much as 28% of a portfolio before becoming inappropriately concentrated relative to its contribution to portfolio volatility, a striking position from the world's largest asset manager. Institutional investors now claim 38% of total spot Bitcoin ETF assets, up from 24% just 1 year ago. These are not retail speculators responding to price momentum. These are pension funds, endowments, and sovereign wealth funds allocating on multi-year frameworks. The institutions most likely to have price-insensitive multi-cycle conviction, Strategy, BlackRock, and the institutional holders representing 38% of ETF assets are all positioned as holders or buyers at current prices. They are not selling. They are buying the dip you are selling. I am not going to give you a one-sided presentation. The bear case has real components that deserve honest acknowledgement. The macro environment. U.S. CPI printed 3.8% in April 2026, the highest since September 2023. The producer price index jumped to 6%. The Fed removed language about progress toward the 2% inflation target in its June communication, and two voting members suggested rate cuts projected for Q3 2026 may be postponed to 2027. The 10-year Treasury yield rose 18 basis points in 3 days, reaching 4.82%. Higher risk-free yields competing with non-yielding assets is a real headwind. The Strait of Hormuz escalation driving oil above $93 creates real inflationary pressure. These are not invented concerns. The ETF structure argument. The 11-day outflow streak removing $3.45 billion is the largest and longest in ETF history. Institutional capital rotating toward AI equities, with Nvidia up 6% on the same day Bitcoin fell 6%, represents a real near-term competitive dynamic for institutional allocation dollars. The cycle timing argument. Veteran trader Peter Brandt projected in March 2026 that Bitcoin would not reach a new all-time high before Q2 of 2027 and suggested a possible retest of $60,000 in September or October 2026. If historical bear market duration patterns hold, with an average peak to trough duration of approximately 383 days, the bottom may not arrive until Q3 or Q4 of 2026. This means further downside is possible, not certain, possible. The honest assessment. The scenario where selling today proves correct over a 1 to 3 month horizon requires the macro environment deteriorating further, ETF outflows continuing or accelerating, and Bitcoin breaking below the $60,000 support level where traders expect heightened selling pressure. That scenario is possible. The data assigns it a probability in the range of 8 to 15% for a deep bear market extension based on the structural on-chain signals. The scenario where selling today proves correct over a 3 to 5 year horizon requires a coordinated global regulatory ban, a cryptographic failure in the SHA-256 hash function underlying Bitcoin's security, the collapse of institutional demand that has already embedded itself into $365 billion in ETF infrastructure, or a macro environment so catastrophic that every risk asset permanently impairs, including the equities that are currently making new all-time highs. That scenario is possible. The data assigns it a probability below 5%, based on the structural signals and the historical record. You're not making a decision about whether Bitcoin will go up or down in the next 30 days. You're making a decision about whether the asset you hold will be worth more or less than today's price over the time horizon that matters to your financial life. And on that question, the historical record, across 5 complete bear markets, each with its own convincing narrative for permanent impairment, is unambiguous. The 10 facts. Every seller is ignoring. Fact 1. Bitcoin has experienced 4 declines exceeding 77% in its history, and has recovered from every single one to set new all-time highs. The current decline of 47%, while painful, is not historically anomalous. It is not even historically severe by Bitcoin standards. Every prior decline that felt permanent was not. Fact 2. The MVRV Z-score at approximately 0.59 is 1/10 of the overheated readings that have historically preceded major cycle tops. Sellers who believed they were avoiding a collapse at every prior top had MVRV Z-score readings between 4 and 8 to justify that concern. The current reading of 0.59 does not provide that justification. Fact 3. The LTH SOPR near 0.819 is approaching, but has not reached the capitulation extremes that have historically marked definitive cycle bottoms. Selling before capitulation completes has historically been the most expensive timing error in Bitcoin investing. You are potentially selling in the final stages of the pain, not before it begins. Fact 4. Approximately 74% of Bitcoin supply is classified as illiquid. The effective float is structurally constrained. Post-halving issuance of approximately 450 Bitcoin per day is being absorbed by institutional demand multiples that number. The supply dynamic does not support the collapse scenario. Fact 5. The minimum post-bear market rally following a 70+% Bitcoin decline since 2013 has been 101%. The average has been dramatically higher. Buy at the 2015 bottom at $152 and hold to the 2017 peak, 130-fold return. Buy at the 2018 bottom at $3,122 and hold to the 2021 peak, 22-fold return. Buy at the 2022 bottom at $15,476 and hold to the 2025 peak, 8-fold return. The seller who exits at current prices and waits for confirmation of the new bull market typically re-enters after 50 to 150% of the move has already occurred. Fact 6. Strategy purchased 34,164 Bitcoin between April 13th and April 19th, 2026, at an average price of $74,395 per coin, while you are considering selling at $67,000. The company that has accumulated more Bitcoin than any other entity on Earth, with the most sophisticated Bitcoin analysis available, was buying the dip you are selling. Fact 7. The 4-metric on-chain convergence, NUPL near capitulation, MVRV Z-score at fair value, LTH SOPR below 1, R CHODL elevated, has occurred only 3 prior times in Bitcoin's history: late 2015, late 2018, mid-2022. All 3 preceded rallies of 300% or more within 18 months. We are in the 4th occurrence. Fact 8. The Fear and Greed Index at 11 represents maximum pessimism, which has historically been a contrarian buy signal, not a sell signal. Analyst Don Crypto Trades confirmed the RSI reading places Bitcoin in a zone that has coincided with many previous bottoming regions across multiple cycles. Fact 9. Every seller at a major Bitcoin cycle bottom who has publicly documented the decision has expressed regret, without exception, across every cycle from 2011 to 2022. This is not a sample. It is the complete historical record. Fact 10. The behavioral finance literature is unambiguous. Investors systematically sell near bottoms, not near tops. The Kraken survey found that 81% of crypto holders make FUD-driven decisions, and 63% report those decisions negatively impacted their portfolios. You're about to add your decision to that statistic, or decide not to. Let us run the actual protocol check right now, not on feelings, on the 4 signals that have historically defined when selling Bitcoin is justified by data rather than emotion. Signal 1, NUPL above 0.65? No. Current reading, 0.24. The distribution threshold is 0.65. We are not in distribution territory. We are approaching capitulation territory. The signal has not activated a sell condition. Signal 2, LTH distribution rate above $500 million per day? No. LTH SOPR at 0.819 indicates long-term holders selling at a loss. Capitulation behavior, not distribution behavior. Distribution at scale and at profit, the kind that precedes cycle tops, is not what the data shows. Signal 3, MVRV Z-score approaching 6 or 7? No. Current reading, 0.59. The distribution alert range begins at approximately 2, escalates at 4, and has historically coincided with cycle tops at 6 to 7. At 0.59, this signal is not active. Signal 4, SCCI sell signal generated. The stablecoin cycle index fired its sell signal on September 22nd, 2025, 14 days before the all-time high. That signal has not been regenerated, not active. The protocol answer: 0 of 4 distribution triggers have been activated. If the reason you are selling is that the data says it is time to sell, the data does not say that. 0 signals have triggered. The distribution ladder has not activated at any rung. The on-chain structure is consistent with a drawdown approaching completion, not a cycle top requiring exit. If the reason you are selling is that you are scared, exhausted from watching the price decline, convinced by the shift headline, or unable to watch your unrealized gains shrink further, that is a legitimate human experience. But it is not a data-driven reason to sell. The Bigot 2024 behavioral study found that written plans reduce strategy deviation by 60%. Not because plans are magical, because the act of committing to signal-based decision criteria before the emotional pressure arrives eliminates the moment of crisis discretion that has cost Bitcoin holders more money than any other single factor. The holder who built their protocol before today already has the answer. 0 signals triggered, no action required. The holder who does not have a written protocol is making this decision with the Fear and Greed Index at 11 as their primary input. Go back to the comment you dropped at the beginning of this video. The price, the ETF outflows, the shift prediction, the strategy sale, the macro environment. Here is what each answer reveals. The price, I cannot watch it go down anymore. This is loss aversion. The Kahneman mechanism. Your brain is responding to the gap between 126,000 and 67,000 as if it were a physical threat. This is the feeling that has caused every holder who sold at a prior bottom to sell at the bottom. The price level does not trigger any distribution signal. This is not a data-driven reason to sell. The ETF outflows, institutions are leaving. The 11-day outflow streak is real. But Bloomberg ETF analyst Eric Balchunas has consistently documented that large outflow clusters reflect portfolio-level rebalancing, not judgments about Bitcoin specifically. The prior record outflow streak of 8 consecutive sessions resolved with a sharp inflow reversal. And the institutions that matter, strategy, BlackRock's own positioning, and the 38% institutional share of ETF assets, are accumulating, not distributing. This is not a data-driven reason to sell. The Schiff prediction. What if he is right this time? Peter Schiff has made over 237 bearish predictions about Bitcoin since 2011, beginning when the price was $17. Bitcoin has risen by over 4,100 times since his first prediction. His track record is not the record of a forecaster who is occasionally wrong. It is the record of a forecaster who has been systematically, persistently, and completely wrong about Bitcoin's long-term trajectory across 15 years. The probability the data assigns to his $20,000 scenario is 3 to 5%. This is not a data-driven reason to sell. The strategy sale, even Saylor is selling. 32 coins, 0.0038% of 843,000 Bitcoin holdings to fund a preferred stock dividend, while simultaneously accumulating 80,000 Bitcoin in the first 4 months of 2026. This is not a data-driven reason to sell. The macro environment, the Fed, and oil in Iran. The macro headwinds are real. Higher yields, inflation persistence, and geopolitical risk create genuine near-term pressure. They have also been present, in some form, at every major Bitcoin recovery. The March 2020 recovery happened despite a global pandemic. The 2023 recovery happened despite the highest interest rates in 15 years. Macro headwinds have never prevented Bitcoin from recovering when the on-chain structural signals were intact. They have only determined the timing. And the on-chain structural signals today are intact. You stayed until the end. Here is what that says about you. You are the holder who wants to make the right decision, not just the comfortable one. That is the only thing that separates the holders who make it through Bitcoin's worst corrections from the holders who do not. The regular retail price for the Bitcoin Holder's Bible is $97. But because you invested your time to get to the end of this breakdown, through the historical record, the behavioral science, the on-chain data, the protocol check, and the honest mirror, you proved you are part of the group that wants architecture, not reassurance. Go to the link below right now and use the voucher code I promised you. Diamond50. All caps. DIAMOND 50. That code applies your $50 voucher directly to your cart, bringing your total investment down to just $47. Let me put $47 in context with the decision you came into this video about to make. The holder who buys at $3,122 in December 2018 and holds to the 2021 peak of $69,000, that is a 22-fold return. The holder who sells at $3,122 because the narrative says Bitcoin is finished and re-enters at $30,000 after confirmation, enters after 900% recovery has already occurred. The holder who exits at $67,000 today and re-enters at $100,000 after confirmation, if historical patterns repeat, will have given up $33,000 per Bitcoin in foregone gains, plus the psychological cost of watching the recovery without participation. The system that prevents that decision costs $47. Here is everything the Bitcoin Holder's Bible gives you. The complete on-chain signal framework, NUPL, MVRV Z-score, RHODL, LTH, SOPR, with the specific thresholds that define each signal's activation state, exactly as I walked through in today's protocol check. The check that produced 0 triggers, the check that says hold. The distribution ladder with 3 pre-committed signal-based rungs. Rung 1 is capital recovery. Rung 2 is significant profit realization. Rung 3 requires convergence of 3 simultaneous signals, the same framework the SCCI fired on September 22, 2025, 14 days before the all-time high, allowing holders who had built their protocol in neutral conditions to distribute near $109,000. The Never Sell Core worksheet, the percentage of your position you define in writing, and neutral conditions, as the amount you hold regardless of price, narrative, or market events. A fear and greed index of 11 and a Schiff prediction are market events. The Never Sell Core is not a protocol trigger. The weekly protocol check. 5 minutes, once per week, 7 questions, 1 output, action or no action. The exact check I ran live in block 9 of this video. 6 composite holder profiles, including Sarah, who built the system in neutral conditions and distributed near $109,000 in September 2025, and Marcus, who held with conviction and sold at $64,000 in March 2026 without a signal because the pressure became unbearable without a framework, the security framework. Because between 1.5 and 2 million Bitcoin are permanently lost due to inaccessible private keys, data from Chainalysis and River Financial 2025 research, And the holder, who builds the protocol but not the custody plan, has left the most fundamental gap unaddressed: the inheritance documentation framework. Because the holder who gets there and cannot pass it on has not finished the work. The code is Diamond 50. The link is in the description and pinned in the comments. $47. The cost of keeping your position through the moment that every prior Bitcoin bottom looked exactly like this one. Before you close this video, one action. Open Glassnode's free tier right now. Find the NUPL chart. Write down today's reading. Open Macro Micro. Find the MVRV Z-score. Write down today's reading. Date both numbers. June 3rd, 2026. Then go back to your comment from the beginning of this video, the specific reason you came in here considering selling. Hold that reason next to the numbers you just wrote. Ask yourself one question. Is my reason to sell supported by the data I just wrote down, or is it supported by how this feels? If it is supported by the data, the protocol will tell you. Run the 4 checks. NUPL, MVRV Z-score, LTH distribution rate, SCCI. If any of them have triggered, the protocol says act. If none have triggered, and today none have, the protocol says hold. If it is supported by how this feels, by the exhaustion, the fear, the 47% drawdown from the all-time high, the Schiff headlines, the ETF numbers, then you now have the complete historical record of what that feeling has produced for every holder who acted on it at every prior Bitcoin cycle bottom. Every single one of them regretted it. If you want the complete framework, the distribution ladder, the never sell core, the weekly protocol check, and the full signal reference with historical context for every metric, the Bitcoin Holder's Bible is $47 today with that Diamond 50 voucher code. Link below. Subscribe so you do not miss the next video in this series, which covers the 3 specific conditions that would actually justify selling and exactly what the on-chain signals will look like when those conditions are met. Because a system that only tells you to hold is not complete. A complete system tells you both when to hold and when to act. And if this video gave you something concrete today, if it converted the decision you almost made into a data check with a clear answer, share it with one holder you know who is in the same position right now. Because today is exactly the kind of day when the gap between those 2 things costs holders the most. All data in this video was verified on June 3rd, 2026, the day of production. Sources are listed in the pinned comment below. See you next time.